please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Let's get you a CNBC TV18 exclusive now. Lata caught up with Shikha Sharma, MD and CEO of Axis Bank, and began by asking her about what she would make of the extended opportunity going ahead.
I'm excited. I'm grateful to the board for having given me this extended opportunity. I think we're living right now in one of the most exciting times for India. For the Indian financial system, with the amount of stuff that's changing. So, you know, you have to exercise every bit of your IQ, EQ. So it's absolutely fantastic, and I feel very honored to have this opportunity. And I think I'm really lucky to have the team that I work with. It's a pleasure to go into office every day, and together we hope that we will make the very most of this period to 2021.
Well, the period to 2021, 4 years. Just your thoughts on, you know, what's the next 4 years? What are the milestones you have set yourself? After all, you'll have bought free charge. We are on the crest of digitization. So any thoughts on how Axis might look 4 years from now?
Okay. So of course, I mean, you know, we will come back and talk to you about the strategy going forwards more fully. But just one thought I wanted to leave with you. In my last tenure in 2010, we acquired Inam. It was a small acquisition from a perspective of dilution to existing shareholders, but it was very material because it made a big difference to our capability on the corporate investment banking franchise, and we're delighted that we've been able to leverage that, integrate that, and create a powerful proposition to corporate customers. I see free charge very much like that. It's not a big bet financially, but it's a very big bet strategically, because I think the world is changing and digital is such a different space and such an important space that I think the ability to work with and leverage a high-powered, competent team to do magic in the digital space, that's what we would hope to do.
Well, you know, I've ambushed you, and it's not fair to ask a huge amount of strategy. Just leave me with one thought on the monetary policy. The expectation is, at least our poll has thrown up, that an overwhelming number of people are expecting a cut. What difference will it make to banks?
So, you know, Lata, we've said that again and again, but I'll repeat that one more time. That more than the rate cut, it's the liquidity dynamics of the market which makes a difference to what happens to interest rates. And
that is plentiful.
Exactly. So the liquidity dynamics has been good. But on top of that, I think a rate cut would only create a longer-term expectation that maybe this liquidity is going to stay, and therefore India is going to be in a softer interest rate environment and more focused on growth. So I think that could be a potential cherry on the top.
Well, that's Shikha Sharma about the achievements of the first term and the extension. Now, the countdown to the RBI's monetary policy has begun, and Lata has been busy. She also did catch up with the Citizens Monetary Policy Committee that we have here at CNBC TV18 to find out key expectations. Take a look.
Sonal, what are you expecting by way of an action? That's a cut from Sonal. Samiran, that's a cut as well. So 2 votes cut. Shaumyo, that's a cut as well, and Sajid, cut. Chairman, in the past, you've called it right, even when you were in a minority. What's your call? Dr. Sen, pause. Okay, so it's 4 members opting for a cut, but the chairman opting for a pause. Now, to the extent of the cut, please write whether you're expecting 25 or 50 or 75 basis points. Sonal, you go first. How much of a cut? 25 basis from Sonal. Samiran, 25 basis. Shaumyo, okay, 25 basis cut. Sajid as well, 25 basis cut. I will not put that question to Dr. Sen because he has called for a pause. Well, a final question to all of you. For the period of this year, how much of a cut, including August 2nd, how much of a cut would you expect? Dr. Sen?
Well, over the course of the year, I would expect something like 50 basis points to be cut. I think if things go as we have discussed, I think the space is there. But I think the critical factor that we have to actually watch out for is what is the position of the banking system vis-a-vis the capital markets.
Okay.
And that's a dynamic which we are unsure of at the moment.
Okay, so 50 basis over the course of the year. Samiran?
50 basis point for us as well.
Okay, Shaumyo?
Yeah, 50 basis point for us, but we would be also looking into the monetary policy commentary very closely.
Sajid?
I'd say 25 to 50.
Okay.
25 is a baseline, 50 at most.
All right.
Okay, Interglobe numbers on your screens, and those numbers look slightly ahead of the estimates that we have from some brokerages. For instance, Ambit was working with a PAT figure of 687 crores, and the reported number as per the press release is 811 crores. 5752 is the top line number, and that is also slightly ahead of at least Ambit's own expectations, which were closer to 5,500 crores. I have the load factors number with me. For the June 17 quarter, load factors are 88% versus 83%. So on a year-on-year basis, it's of course an improvement, though I don't have the comparable for the previous quarter, the sequential. But I think we've got Sonal joining in. Sonal, first thoughts, Interglobe?
Well, it looks like good set of numbers. The revenue are up at around 25%. What Ambit was saying that they'll see an increase of around 20%. The good part here we see is that yields, we were expecting the yields to decline because there was no increase in the airfares, though the RPKs, that is the revenue passenger kilometers, had increased in the last quarter. Yields are up by around 2%, which is very positive. Apart from that, if I see the fuel cost that was supposed to be a problem, that is up at around 29%. Other costs, excluding fuel, are also up at around 17%, but that was already factored in. We thought that other costs and the fuel costs will be really high this time in time. Apart from that, the total cost on the whole is up at around 21%, but this was expected, and we see that this is a good set of numbers in the whole.
Looks like it seems to be fairly stable and slightly ahead of some of those estimates, Ambit's estimates. Total cost is up about 21%. As Sonal pointed out, fuel cost has risen by about 38%, and the yield has shown an increase. June 17 over June 16, this is a year-on-year comparison. It's at 3.83 versus 3.75. So that's a 2% increase in yields as well. So not looking so bad for Interglobe. Okay. On that note, let's get you another corporate exclusive. Boeing is betting big on India. In an exclusive conversation, CNBC TV18's Shereen Bhan caught up with Dinesh Keskar, Senior Vice President, Asia Pacific and India sales of Boeing commercial airplanes, began by asking him about the outlook on India.
India is now the highest growth market in the world, and not one of the highest. And we are seeing double-digit growth here consistently for the entire year last year. We came very close to 100 million passengers in 2016, and I'm confident that we're going to get close to 120 million passengers flying this year. Again, pleased to see this market continues to get better and better. It is certainly in the top 5 now, and 2,100 airplanes in the next 20 years worth 290 billion. Quite excited to announce that today.
So give me a sense of when we can start to see the deliveries being made to SpiceJet, and how deep and significant is this relationship with SpiceJet for Boeing going forward?
SpiceJet has taken, now that they have recovered significantly, have taken a firm decision to grow fast and catch up with the market share. So they had already announced, as you know, in January, 100 airplanes. And now with these airplanes, they're adding 20 more, and they have a previous order also. All of them is going to get them pretty close to their goal. And these 20 airplanes that were announced in Paris were really part of the launch group, which allowed us to go ahead and put another airplane in the market called the 737-10, which will take head-on our competition A321.
Let me ask you about what you make about the proposed privatization of Air India.
With a base eventually of over 45 wide bodies, I think clearly they will continue to grow with the type that we have, and I think that is why we see an opportunity. I think we see privatization as a way to bolster Air India even stronger, make it more viable.
The government is betting big on the regional connectivity scheme, the UDAN scheme. In fact, the second round of bids now underway. Mr. Keskar, how are you at Boeing looking at the regional connectivity scheme and the future opportunity and potential?
I think people will take a plunge, and as you correctly said, the bids are coming in, the new routes are being opened. When that happens, at the growth rate of, forget the 20%, even at a 15% growth rate, it will take only about 4 to 5 years to go from a 90-seater airplane to 150-seater airplane.
Okay, more numbers. Tech Mahindra, that first number that we have is a big, big beat. The rest of my PNL is taking a painfully long time to open. But at 791, that Rima is a very handsome beat. I mean, I don't know, we'll have to wait and see if there are any extraordinaries, because overall you were expecting flattish trends for Tech Mahindra this time, right?
Yes, so I think the bottom line is coming as a beat. Let me get you the dollar revenue growth. The dollar revenue growth has been, it's up 0.6% at $1,138.1 million. Now that is slightly, just a smidge better than what we were anticipating at 0.3%. I'm just trying to get hold of what the EBIT is. The EBITDA has come in at 935, which implies an improvement in margins by 70 basis points to 12.7%. So EBITDA margins have improved by 70 basis points. The street was working with an improvement in margins for Tech Mahindra on the back of cost rationalization. So the numbers that we have right now on the top line, a 0.6% dollar revenue growth, just a smidge better than expectations. EBITDA margins have improved by 70 basis points to 12.7%, but there seems to be a big beat at the bottom line. It's a 36% increase that we've seen in the company's profitability on a sequential basis, with the EBITDA higher by just 70 basis points. I suspect it cannot only be driven by a margin performance, so there would be something below the line item, which we're just trying to get hold of if we could. So going by the, okay, let me just try and see if I can, get hold of something. The other income has shot up. So the other income has gone up to 410 crore versus 238 crore. So that explains why the profits are significantly higher than expectations. So it appears that in-line numbers on the top line, in line at the margin level as well. The other income has shot up significantly, and that is driving a big beat at the bottom line, with the profits rising 36% on a quarter-on-quarter basis. We have Urmil Shah of IDBI Capital joining in on with us on the show. Urmil, your first thoughts on Tech Mahindra?
Yeah, so the first thought is that the result is a beat because we were expecting revenues to decline on a QOQ basis because of weaker quarter for Combiva as well as for LCC. So that's the main beat, as well as you said, that the EBITDA margins have improved. We were expecting that because of weaker Combiva revenues as well as INR appreciation, the EBITDA margins to come off. So from that regards, it's good to see that the numbers are a beat.
Okay, actually let me just say the margins are actually a beat. I now have the EBIT margins, and EBIT margins have come in at 9.4% versus expectations of 8.6, 8.8% thereabout. So EBIT margins have improved by 120 basis points on a year-on-year basis, and that is significantly higher than what the street was anticipating. Remember, for Tech Mahindra, the decline in margins has been a key problem. The company, even after the improvement of 120 bips on a sequential basis, has margins of 9.4%, basically single digits versus peers who are operating at 20%. So the sharp fall that we've seen in the company's margins has been a source of concern. But this time around, in Q1, there is a beat at the margin level, and there is a handsome beat at the profit line. Urmil, on the top line, has it come in line with your expectations, or is there a beat there? What were you anticipating? It's a 0.6% dollar revenue growth.
No, there is a beat there as well. Okay. We were expecting revenues to decline on a QOQ basis. Okay. As I said, because of weaker LCC revenues, as well as, Q1 is seasonally weak for Combiva.
Okay, so for you, it's an all-round beat. Let me also get in Karan Taurani of Daulat Capital on the show. Karan, your thoughts? Would it be a beat compared to your expectations? And do you think, early numbers right now, but there could be a revision to your estimates?
Some beat on the revenue front by about 1.2%, and it's a massive beat on the PAT. That's largely because the forex gain. I would need to look at the EBITDA margin to get more clarity on that.
Well, EBIT margins are at 9.4%. So what was your poll there?
Yes, we're expecting about 8.6%, so there's about a good 1% beat on the EBITDA margin as well. So the numbers overall look good prima facie.
So do you think there is a case to revise your EPS estimates higher because of the margin beat and the profit jump?
Yeah, we would be revising our EPS estimates higher based on these numbers.
What could be the stock reaction tomorrow? Because it's been an underperformer. It's down more than 20% in the last 1 year.
Yeah, so you could see some kind of upside momentum in the stock given these quarters' numbers. So, I mean, you could see good about a 4 to 5% kind of an upside tomorrow.
What's your call on the stock?
We have a reduced rating on the stock as of now.
Would you change that rating, or do you see the possibility of a ratings change?
That clearly depends on the sustainability of the margins, because the margins have been very volatile because the LCC and other things we have been doing. So if the margins are sustainable and there's some recovery going ahead, then we may change our rating. Otherwise, we will maintain the reduced rating.
Okay, so Q1 margins beat. Sustainability is the key going ahead. Sarabjit Kaur Nangra of Angel Broking also is here with us on the show. Sarabjit, is it a beat for you too?
Yeah, it's a huge beat actually. We were also anticipating a dip on the top line Q-on-Q margins to just be around 8.6. So definitely it's a beat on all the matrix and parameter, I would say. So yeah, definitely a huge beat actually.
I'm just looking at the internals in the fact sheet, trying to pick out, maybe what granular details have changed. So the percentage of repeat business has gone up substantially in Q1. At the end of Q4, the percentage of repeat business was at 93.5%. That number's gone up to 97.2% this time around. They've also added a significant number of clients in the 20 million bracket, not the 50 million, which is their top bracket, but at least in 20 million. Number of clients has moved from 36 to 41, so they seem to be getting deals in that bracket
even
size.
in the $10 million clients have gone up from 71 to 74. The $5 million clients have gone up from 134 to 139. So yes, I take your point. The 20, 10 and $5 million client addition looks quite healthy this quarter around.
So these are some of the details. Otherwise, utilization rates, attrition, etc., those parameters are largely stable for the company, sequentially speaking, Q4 to Q1.
Attrition being maintained is also quite a positive.
Actually, yeah.
The reason for that is, one, Q1 is generally seasonally, it's the number where you, on account of seasonal factors, because people go abroad to study, etc., attrition spikes up. And secondly, for Tech Mahindra in particular, they had deferred their wage hikes, if you remember, and there was a lot of ruckus, surrounding it. That audio clip went viral. So for their junior employees, that's sub 6 years of work experience, the wage hike had been deferred from 1st January to 1st of July. So, the sense was that maybe because they have deferred their wage hikes, attrition could have spiked up. But it hasn't. They've maintained it. I think it's 17% unchanged on a quarter-on-quarter basis.
So the question is, what next for the stock? Urmil, yes, it's a handsome beat on the margins, but given the fact that the overall disenchantment with the sector at large, do you see, lasting traction on the stock on the back of this Q1 performance?
Yeah, I would say so, because it's been at least a couple of quarters since TechM has given a beat, and this quarter it's an all-round beat. So I would say that, and the valuation is also very undemanding. So I would say that the stock should look up from here.
I think margins have at least disappointed for the last 4 quarters now for Tech Mahindra. So
at least inching to that double-digit number, almost there at the end of Q1. Not quite, but just almost edging to that level. Well, Rima, any more questions for our experts before we wrap up this edition of Closing Bell?
Urmil, any more, have you gone through the numbers in greater detail? We started with you, so let me give you the last word. Anything more that you would like to add on Tech Mahindra?
No, so as you said, the growth in the large clients as well as the repeat business was strong, and BFS continues to do well for them. I think that has grown the fastest. This has been one segment which only TechM and HCL Tech have been able to do well in this quarter. So otherwise, as I said earlier, the result is a beat for us across the board.
All right. Okay. Thank you so much for your expert commentary, Sarabjit and Urmil. And Rima, thanks for joining in and helping us go through those numbers. Well, it's an earnings-heavy start to the week, like has been the trend. That's it on this edition of Closing Bell. Do stay tuned. After the bell comes up next.